In this video, we are going to show how SAP Business ByDesign for public sector ensures that an organization's multiple funds are kept self-balanced automatically. So any nonprofit or public sector organization that maintains multiple funds will have those funds kept in balance automatically by the system for any transactions, whether those transactions are limited to a single fund or cross funds. To start off with, we'll run through the invoice to disbursement process. And we'll start with an invoice that has been charged across multiple funds. In our example here, we see that invoice 14 has 3 line items on it, and each of those 3 line items is allocated to a different fund. So line number 1 goes to fund 1000, 2 to fund 2000, 3 to fund 3000. So therefore we have a single invoice whose charges are allocated across multiple funds. Now that the invoice has been posted, we can take a look at the general ledger impact of that posting. So we'll go into our view all and take a look at the document flow. So from here, we can click on this little folder icon to see the general ledger entry that was created when this supplier invoice was posted. So what we see is that the charges to the supplies account are broken down by fund, as we saw in the previous screen on the invoice. So funds 1,000, 2,000, and 3,000. However, because the system has a reporting principle that forces funds to retain their balances, this will effectively split the accounts payable or accounts receivable control accounts in the same manner that the line item distributions are split. So therefore, we see that the posting to the accounts payable control account is also split by the same amounts. So we're posting to accounts payable, but we are splitting that posting by funds 1,000, 2,000, and 3,000. The result is that our balance sheet for each of those funds will stay in balance. So we've got a P&L impact going across multiple funds, and then the offsetting balance sheet posting is split exactly the same. So therefore, we are now in balance across each of those funds. Now, if we follow this through and we look at the check that was cut to pay this invoice, so we see supplier invoice 14, we see a payment allocation, something called a payment order, and we see that there's a general ledger posting associated with that, and we'll drill into that. And then what we see here is that the cash disbursement is also split. We had our control account split into 3 different funds, 1,000, 2,000, and 3,000. But our single check was also split the same way. Therefore, the debits and credits to the balance sheet in funds 1,000, 2,000, and 3,000 are therefore still in balance. Now, eventually, we will have something called a payment allocation, and that happens when we actually reconcile the cash. So we see here at this point in time that we're really just showing that the cash cleared, and our basic journal entry is broken down once again by funds 1,000, 2,000, and 3,000. However, the total check of $2,496 is coming out of fund 1,000, and that is because the cash account that we've used for this payment is associated with that fund. It's associated with the general fund. Now, notice that there's a button labeled View All. This is to allow us to look at the additional journal lines that were auto-created by the system to ensure that we are in balance. So if we look at this basic entry, we see that we've got 2,496 against 1,000, but we've got some other entries, some other debits in other funds such that we would end up being out of balance on our balance sheet. Go ahead and click View All to show all of the lines. And what we see then is that there is an additional posting to something that we label Profit Center Clearing. We can actually relabel this to Profit Center and Fund Clearing. But the result is that this is also a balance sheet account, and that we are, in essence, forcing everything to be balanced by fund.
So to add to this, these clearing accounts represent the inter-fund balances. These are setting up the two firms.